Firstly, this video is an excerpt from my mega analysis that concludes in a detailed stock market trend forecast into the end of 2023 that was first made available to patrons who support my work. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $4 per month. Lock it in now, as it's set to rise shortly after the new year to $5 per month. The stock market and the 10-year bond yield. The consensus view is that falling bond yields are good for stocks. However, that's not accurate. What stocks like is mildly falling or rising bond yields. What stocks don't like is what we have witnessed since the start of 2022. That is fast moving bond yields as the bond bubble burst in the wake of high inflation that was supposed to be transitory, remember? Therefore, the pattern one needs to witness is for bond yields peaking, stabilizing and entering a shallow downtrend. That is what is best for stocks. Are we going to get that? Doubt it. But the overall trend pattern suggests that bonds are in a capitulation of sorts, which will punctuate in peak rates that should give stocks a temporary boost, i.e. bond yields will peak and then fall at a rapid pace, and that is the problem because bonds are a competing asset class to stocks. So be careful what you wish for. Rapidly falling yields are not bullish for stocks. They're sucking money from the stock market rather than push money into stocks. At best, stock investors can hope for is a mild trend lower in yields, which, given that inflation should remain well above the 2% target, they can forget about 2% this side of 2024. What's probably going to happen, and therefore it should at least act to put a floor under the stock market during 2023, falling yields, a floor of sorts, so unlikely to see lower lows. What this implies that after the initial panic of peak rates, probably during Q2 of 2023, stocks will be weak as rates fall, as investors switch to capitalize on the rising bond prices as the US economy continues to weaken. Though I doubt we will see the price of 2022 repeat itself. I doubt we will see lower lows despite rising bond prices. As net negative for stocks, however, they also act to be supportive of stock prices in the longer run, which stocks tend to discount in the present by looking beyond the recession. I'm not a bond investor, not my cup of tea, but given what is likely to transpire, I'm investigating some limited exposure to US bonds during 2023, and given that I reside in the UK, the following two bond funds are on my radar: IBTM and IBTL. I'm not expecting huge returns, maybe in the region of 10 to 20% after FX, allowing for the FX penalty that we incur in the US. Definitely not for the long run, more a range trade as I do with stocks such as GSK, but at least it gets me a little more out of sterling into something that should beat UK inflation, which is raging above 10%, even on the inflation fake indices, CPI. And this video is merely an excerpt from my extensive analysis, truly extensive analysis. It's mega analysis, even from my standards, it's a mega piece that concludes in a detailed stock market trend forecast into the end of next year, end of 2023. A detailed trend forecast that tries to map out the trend for the Dow into the end of 2023. That's why I needed to do the extent of the analysis I had to, because to settle on a high probability trend forecast, and which was first made available to patrons who support my work. So for immediate first access to all of my analysis trend forecasts, then do consider becoming a patron by supporting my work for just $4 per month. That's nothing. $4 per month, that is nothing. And my forthcoming, you get access to all of my recent analysis apart from this mega piece, and the schedule of analysis includes US house prices trend forecast. That would be 3-year trend forecast. I already released a preliminary forecast, so I had to hit the pause button on that to focus on the stock market, but I've done 80%, so I've got a rough idea where it's going. I just need to finish it and fine tune it. That would be my next piece, mega piece. And then there's regular analysis, you know, updates on the state of the stock market portfolio. Then there's the global housing market. I'm going to do that about halfway done. Then we'll look at the detailed look at the British pound and US dollar, even though it is included in this analysis. I have done analysis of the dollar, which is important. And then I'll update the high risk stocks portfolio. There's 2 of them. There's the mid 2021 and the February 2022 portfolios. And I'll have a look at the crypto markets. Is there any sign of life there? Is it falling enough? I remember when I did the analysis last year, I was looking for around 83% drop in the Bitcoin price. Has it fallen by 83%? The high was around 70,000, so I don't think it's got there quite yet. And then I'll have a look at gold and silver, though it's not top of my list. And for Christmas, a special, how to get rich. This is not some garbage. This is step-by-step guide of what you need to do. It's not, there's no easy way to get rich, but I'll do my bestest to teach you how to get rich. Hardcore, no waffle, direct points, step by step how to get rich. That will be posted during Christmas. That's a mega piece. That's what I'll probably update that annually, you know, as I add more stuff to it, because step-by-step guide. So for all of that, do consider becoming a patron by supporting my work for just $4 per month to get immediate access to all of my analysis and trend forecasts. $4 per month is nothing. And do remember to subscribe to this YouTube video for new videos. Gaining access to over 35 years experience, right from before the 1987 crash straight through to this stock's bear market, that will ride the quantum AI megatrend into the future.
Should old acquaintance be forgot and never brought to mind? Should old acquaintance be forgot and all lang syne? For all lang syne, my dear, for all lang syne, we'll take a cup of kindness yet for all lang syne. For all lang syne, my dear, for all lang syne, we'll take a cup of kindness yet for all lang syne. For all lang syne, my dear, for all lang syne, we'll take a cup of kindness yet for all lang syne.
Yeah, hey, hold it. Yeah, the reflection.